Welcome back to the second half of NEWSBREAK Live, and joining me is Holman, who is the co-founder and co-managing director for EP Wealth Advisors, which is located right here in Torrance. How are you today?
Good, thank you.
Thank you for joining me. And we're talking about a really big topic. The House passed a new proposed tax changes recently. So for many, they're probably wondering, what does this mean for me? What happens next? So let's start talking about breaking down this plan, and I know it has to go to the Senate still, correct?
Correct. You're right. It has not become law. It's still in the proposal stage. But we are getting a lot of calls on it right now, and mainly everybody's wondering, what does this mean to me? And it's confusing out there right now because there's two different proposals being brought to the public's eye, and that's through the House and the Senate. There's a lot of overlap between the two policies, but there is, or the two proposals, but there is also quite a bit of differences as well. And so you have that, and plus you have just a number of different areas of the tax law being changed. So there is a lot of people trying to figure out what this means to them.
What does it mean for the average person, families here in Torrance, across the South Bay?
That when our clients call us about that, it's basically we can't tell them specifically what it means to them. It's a mixed bag. There's going to be winners and losers of this. But there are some real key differences right now between the policies or the proposals out there. One being that, first of all, all the tiers are going to be dropped, all the income tiers. So everybody is effectively going to have lower taxes from that standpoint. One of the other nice features is that the standard deduction, right now it sits at $6,000 per individual and $12,000 per married couple. That's going to be doubled to $12,000 per person and $24,000 per married couple. So the standard deduction is going to be increasing, which is a major tax savings for a lot of people. So the way your taxes are figured out is you have your income and then you subtract your deductions from that, and that's how you get your taxable income. So people whose income, all else being the same, their deductions will go up and they'll have less taxable income and at a lower rate. So that should be a big benefit. However, there are a number of people that use itemized deductions. And itemized deductions, there's a number of different factors that go into itemized deductions. So some of them might be mortgage interest, state taxes that get paid, property taxes, all of these, your charitable contributions, all of these get added up together. And if it's greater than a standard deduction, then you can use the itemized deductions and you can reduce your income by that number. However, both proposals are looking to dramatically reduce the amount of itemized deductions that people can take. So if you depend on itemized deductions, your taxes actually could go up under both these tax proposals.
Okay, and when it comes to businesses, many experts say it will benefit a lot of businesses. Corporate tax will go down from 35% to 20%, correct? So what does that mean for local businesses? Is there going to be a difference?
Most of the tax savings that's going to happen, most of the tax benefit of these proposals is actually at the corporate level for business owners. So you're right, our tax code is one of the highest in all of the developed countries. So we pay taxes, or corporations pay taxes right around 35 to 40%. Now, in both proposals, that's going to drop to 20%. So that's over 50% drop. That's very dramatic. Now, a lot of business owners will benefit from that, but unfortunately, because of the way tax law works, is you can only include so much tax deductions and have so much revenue cut in order to have this pass. They can only cut taxes so much. So what they're having to do is limit some deductions and take away some things on the other side in order to help facilitate these tax payments and make them permanent. So that's the trade-off. So a couple of the proposals right now on the House side, one of the thoughts is that they're going to be maybe getting rid of the individual mandate, which requires people to get health insurance. So there's a lot of people that are required to get health insurance and the government subsidizes them. Without that subsidy, that's an expense for the government. So no longer will they need to be having that expense, and so that allows these tax cuts to continue. And on the other side, on the House side, and this is key for a lot of retirees, is the medical expenditure might get taken away. And so a lot of people depend on the deduction from medical expenses, and that might get taken away if the House proposal goes through.
So there's clearly a lot of pros and cons, but what you're just talking about specifically, is this for seniors when who have chronic illnesses or in nursing home care? It could affect them dramatically, correct?
Absolutely. In some cases, they might see their taxes go up. Their standard deduction is great enough by increasing that by 100%, doubling that. So that could offset a lot of the medical expenses, and the thinking goes that that should offset some, but some people who have extremely high medical expenses actually might not get that deduction as much anymore.
What about real estate?
Real estate, unfortunately, we live in a state that has high state taxes and high real estate values. It's a good thing if you're a homeowner, but under both these proposals, if they get rid of the deduction for state tax, we live in a high state tax. If you get rid of mortgage interest for new purchases, or you get rid of the deduction for property taxes, all of those would be negatives for real estate. So one of the thoughts out there right now is that we wanted to even the tax code. So in a lot of ways, people that live in low tax states are subsidizing people that live in high tax states. And what I mean by that is if two people earned $100,000 and one lives in Nevada where there's no state tax and one lives in California and has state tax, the person that lives in Nevada would pay tax on $100,000 to the IRS. The person that lives in California would have $9,000 of state tax, but then they'd get to deduct that. And so now they'd only report $91,000 to the IRS. So effectively, they pay less to the government than the person that lives in Nevada. So people who have in low tax states don't like that we get deductions in high tax states. So there is a big push for that. The problem is this is the way it's been for a long time, and you take it away all at once, it could end up hurting some people.
So we can see some pros and cons like I just mentioned. Do you think people should be concerned? I know you mentioned a little bit about this, the retirement savings, their retirement savings?
Well, there's actually no proposed changes to the way that retirement plans are done right now. So that, in a lot of ways, the retirement industry dodged a bullet because there were some proposals in there that we're going to start limiting some contributions and looking at those ways to try and save some money for these other tax cuts. But as of now, there's no thought that the retirement plans will be touched.
So this is still proposed. There's still a lot of work that needs to be done. How do you think this will affect your business right here in Torrance? I know you mentioned people have already been calling you. So how do you think this will affect your business?
Well, our business is to help our clients reach their financial goals, and we do that through investment management and financial planning. So we've helped our clients navigate through a lot of different tax environments, and in almost every administration has changed the taxes in some way. This one happens to be a little bit larger than most, but in a lot of ways this will not change the way we do business, which is trying to help our clients reach their goals.
For people tuning in right now, this is Derek Holman, who's a co-founder and co-managing director for EP Wealth Advisors here in Torrance. So speaking of your business, what do you guys do? What services do you offer right here in Torrance?
So we're a financial planning and investment management firm. We call that a holistic wealth manager. And the way that we work is we have a financial planning department and an investment team that helps our clients on both sides. We look at the investments as a way to grow the portfolios, and we use low-cost investments and good performing investments in order to do that. But we also think financial planning is a big component, and that's whether that's tax work or that's help with Medicare, that's help with mortgage interest and looking at how to buy homes and how to withdraw money. So we help really in all areas, and we have a whole financial planning department that helps our clients with that.
And it's very interesting how your company started. It's very unique, and you're here from the South Bay. You started this company with your friend from middle school. Tell our viewers about that.
Yeah, it is different than most firms. We started, I've known my business partner since middle school, like you mentioned, and so we have a lot of comfort with each other, and we share the same values, and so that's very nice, and it creates a good environment. We have a good team at our office, and we enjoy coming to work every day. So, and one of the other things that's really interesting about us is that we're really one of the first firms to come in and start offering investment management services as a fiduciary. So there's a lot of firms that offer sales-oriented investment advice. So we operate as fiduciaries with our clients, which means that we have the client's best interest. We have put our client's interest ahead of ours. And not a lot of firms operate 100% that way. So we were one of the first firms to start doing that.
And Mr. Holman, we were talking about the proposed tax changes. For a lot of people, it might be overwhelming. So if there's any advice that you can give about it, what would you say?
Yeah, again, it's a mixed bag. It's really hard to say overall. I do think overall most people's taxes will go down, although I do think that there is going to be some people that might have some negative implications of this. But there is some tax planning that can be done. We're in 2017. These laws will take effect in 2018. So I would say call your accountant or call your financial advisor and talk through some of these strategies. We're pretty close to getting this passed. We'll have some time to be able to make some changes before the end of the year. And so I would say reach out to the people that you trust and get some good advice.
What's the best way if someone wants to get in touch with your company? And is it going online, calling you guys?
Either. Going online is always easy. You can get some good information about us, see if we're a good fit for you. And I think the web address might show up, but it's epwealth.com.
Well, thank you so much for joining me. I really appreciate it.
Thank you.
And just as Mr. Holman just mentioned, be sure to consult with your financial advisor if you have any questions. Well, that does it for NewsBreak Live. And if you ever have news or video that you'd like to share, please email us at newsbreak@torranceca.gov. And don't forget to tune into the Torrance City Council meeting tonight. For Facebook and Twitter users, use hashtag NewsBreak Live. I hope all of you guys have a great Thanksgiving holiday. Have a great night.